Hello, in this presentation we will compare QuickBooks Online versus QuickBooks Desktop. Hello, in this presentation we will enter the bank reconciliation for the first month of operations into QuickBooks Online. Here we will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. We are on QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to be entering bank reconciliations for the first month of operations. For this problem, we have entered data as a new company or a company new to the QuickBooks file and entered beginning balances, then transactions for the month of January and February. We have not reconciled either January or February, although we have entered data for both months. Now we're going to go through and we're going to reconcile the bank accounts first for January and then in another presentation for February. Both of those 2 months are going to have their own kind of problems. The first bank reconciliation we have often causes more problems because we have to get that beginning balance right. And oftentimes there's some transactions that take place before we start entering the data into QuickBooks, and we're going to have to deal with that beginning balance in order to figure that out and see how to deal with that. Once that's been done, then the second month of operation will be easier in that format, in that we will not have that the beginning balance should be correct after we do the first bank reconciliation. So the first bank reconciliation usually has most of the difficulties when starting a new business. Once that's set up, once that's gotten in place and is correct, the reconciliation process actually gets a lot easier as we go. So the reconciliation process, what is it going to do? We're going to go to the reports here to look at it real quick. We'll go to the reports on the left side. We're going to go to the balance sheet report. Now we've had 2 months of operations, but we really just want to see as of the end of the first month because we're reconciling January 31st. So we're going to type in 01/31/21 to 01/31/21, meaning just the day of January 31st, 2021 to January 31st, 2021. Remember, the balance sheet is as of a point in time. So then we're just going to run that report, and it'll give us our balance sheet for that date, for January 31st. It wouldn't matter if we put January 1st to January 31st because really it's just going to give us that checking account balance as of a point in time, as of the end of the time period, as of January 31st. So we have at that point $94,436.17 in our QuickBooks system. What we want to do is verify that amount and make sure that it is correct. How do we do that? One way is that we can compare it to the bank. The bank is a huge check against our system to make sure that we are doing things correctly, because the bank is really a third party that actually records all of these transactions again on their side, and they're an uninterested third party or a third party that's not directly affiliated with the company, and they're basically just double checking all of our numbers. So therefore, if we can just check and tick and tie what we have in the checking account to what the bank has in the checking account, we have a lot more verification. So after the double entry accounting system itself, this verification method is the second best internal control we have. One of the biggest defenses we have against making an error. One of the biggest safeguards we have to feel assured that our financial statements are correct. So we're going to look at these transactions and say, is that what is on the bank statement? So if we get the bank statement as of this date, obviously when we get the bank statement, it'll be sometime after January 31st because they'll have to, enter all the data and give us the bank statement. Also note that if we do have an electronic system, that's great, and we can see things happening in real time and everything, but we really want to reconcile as of the bank statement date because that'll give us a distinct line of this is what happened in this month of operation, and that'll give us a time frame on which we can enter the data and reconcile the data. So we really want not just an online stream of transactions, but a statement saying, hey, this is what happened in the month of January. And that's going to tell us, the bank statement typically will say, here's our beginning balance, here's what you started with, and here's the activity, additions in terms of deposits, checks or other withdrawals, and here's the ending balance. So note that this is the key number. This is our ending balance, 109,415. You would think as of January 31st, that would be what is on our books as well. And as we just saw, it's not. Now, that could mean that there's an error and we have to adjust something, or it could mean that it's just timing differences. Timing differences meaning that we have entered transactions that have not yet cleared the bank. So the general rule is going to be this. If it's on the bank statement here, oh, by the way, obviously we're going to have other data here. Here's the deposits that are going to make up the total deposits number here. And here's the checks and other draws, other deductions that make up the total number here to get to our ending number. What we're going to do is just tick and tie all these off, and it's a bit of a tedious task. It's just something that we got to do to just check everything off. And if something is on the bank statement and not on our books, the typical rule is that the bank statement is probably correct and we will have to fix our books. Meaning, if we see some transaction here that's on the bank statement, such as a check or something like this, in our case it'll be withdrawals and service charges on the bank statement, and they're not in our books, bank statement's probably right and we're going to have to make the adjustment. If on the other hand it's on our books and not on the bank statement, the general rule is that it's going to probably be a timing difference, meaning if we had a check, say, for check number 11011 for some amount and it was written on 131, well, maybe it just didn't clear the bank yet and it hasn't cleared. So that's not really the bank's fault, but we're going to say it's kind of like an error on the bank side. Our books are right because we know that that check was written, and that will be the reconciling item that we will have. The same with the deposit side. So once again, we're going to just check off all of this stuff as we go through this. And as we do that, if something's on the bank statement, not on our books, we're probably going to have to fix our books. If something's on our books, but not on the bank statement, it's probably just a timing difference, meaning a check that's been written towards the end of the month that has not yet cleared. That will be a reconciling item. That's what we're going to use to construct our bank reconciliation. So let's take a look at what this looks like. I'm going to go back to the reports. To get to the bank reconciliations, we're going to select this cog up top, and we're going to go to the tools, and we want to reconcile. So we're on that cog up top. In the tools section, we're going to reconcile. So we'll select that item. I'm going to scroll down and I'm going to select the normal reconciliation process. Now note, there are going to be times that we can link our books to our bank books. And that could be great because what it really does is it saves us time from ticking and tying off certain transactions, and it'll be able to kind of tick and tie those off for us. But we really still need to know what is happening. It'll save us time of just ticking and tying, but we still need to go over the whole kind of process just to see how the bank statement works. Otherwise, the automation that could save time may actually just confuse more rather than save time. So it's not going to be something that the automation typically is not going to be something that's just basically going to mean that you can just press a button and the whole thing does it and you don't have to do anything. It could save time by basically ticking and tying out certain transactions that can be verified on both sides while we reconcile. And what we're doing now, of course, is we are entering everything in the books ourselves, and then we're having looking at the bank as a separate bank statement and manually going in there and ticking and tying off the items. So that's going to be the difference. We're going to go through that kind of manual type process. When you link the bank account, you can kind of pull over some of those transactions, and then of course the system can automatically tie them off because they were pulled over directly from the bank statement. So we won't get into that now. We want to know the theory though. No matter how you tie this thing out, you're going to have some idea of what a bank reconciliation is, what it does for you, and how one is constructed. And then you can kind of work on making the process faster and more efficient. So this is going to be the items. We're going to say that this is going to be the checking account. Typically, we're going to reconcile any kind of cash account. So a checking account typically will definitely have to be reconciled. Now, the first thing that we're going to do is the beginning balance here is $25,000. This was the beginning balance that we first started when we entered the first check, the first opening balance into the checking account. Now, if we had not done that, meaning if we didn't put in this $25,000, we didn't know what it was, but we knew we had a checking account balance before we started, then that account will be zero. It'll be zero right there. And what we'll have to do in that session, if that's something that you're dealing with in a different problem, then One way to deal with that is to just keep that 0 and then check it off as one of the activity items. So when we go through, you'll check off the 25,000 as the beginning balance, and that's one way you can kind of work around that first month of reconciliations to be able to reconcile that first month of operations. So for us, we've got that 25 in there, and that's one of the things that's kind of a problem sometimes for that first bank reconciliation. Okay, so then we're going to have the ending balance. So the ending balance we're going to say is this 109,415. So that's got the 109,415, and then the date is going to be 01/31/21 is going to be the date. Now those are going to be the required fields that we're going to have in order to complete the reconciliation process. These numbers, of course, need to just match what's on the bank statement. So we got the beginning balance and the ending balance, which matches the beginning balance and the ending balance. So that's the requirement before we can move forward. If we don't have that the case, then it's not gonna, the thing won't work. So those are the requirements. Then we have it as of the date of the financial statement, of the bank statement. And then this information down here is not required. And I actually think it's better not to use these fields, at least when you're learning, because they can kind of check things off and it's just like a ghost check. You didn't actually physically check it off, so it can confuse you when you're not in balance. Meaning, if there are service charges, for example here, we have bank service charges, we could put that into that section. We could put that right here, and it'll charge it to bank charges automatically and kind of check it off. But it's something that I would rather go in there and physically check off in the bank reconciliation process, just to know if I'm not in balance, that's one item that's been reconciled. The same can be true if we had interest income in the bank statement. We could check that off right here. So I'm not going to do that right now. I'm gonna reconcile, go forward without that, and then we'll go through and just tick and tie everything off. So we're going to start reconciling. And here's what our reconciliation kind of worksheet looks like. What we have down here, we have all selected. So we have everything selected at this point. If we scroll down, we see the activity, and this is really just going to be the register, the general ledger, or the transaction detail within the checking account. So here's everything that we have in our checking account, and we're comparing that to the bank balances. So up here we have the statement ending balance. This is what is on the bank statement that we just saw in the ending balance as of the end of January. This shows the cleared balance, which is equivalent to the beginning balance, because the beginning balance is what we already know that cleared the bank. That was on the beginning balance of the bank. And now we need to check off everything off. And as we check things off here, it will reduce the difference. So we need to get basically this 25,000 up to the 109,415. We've already checked off, in essence, if we look at our bank statement, the 25, we've already checked that off. So that's done because it's our beginning balance. Now we're going to check these two off, but we're going to do it line by line, item by item. We're going to check every item off. Once we find all of these, then our cleared balance will be the 109,415. That's all we're doing. Here is our the balance that we've checked off. We're going to go through and check off every other item that's on the bank statement. And by us selecting every item that makes up the beginning balance and the additions and subtractions, we will then have a cleared balance, the amounts that we have told the system that has been on the bank statement, that will be equivalent in our books to the bank statement of that. What's the point of this then? We will have some things that are not checked off, some things that are still unchecked off. This is the check, so we check it like that. Some things will still be not checked, even within this date range, and those will be the items that will be uncleared, and therefore the items that we're going to be part of our bank reconciliation. We will then create the bank reconciliation, which will show the difference between our balance, what we saw on our balance sheet, and the bank statement, which is this balance here. So here's our difference. At the end of the day, this should go down to 0. Okay, so now we're going to go through this. We're going to do this step by step. This shows all the transactions here that we could go through and check off. Oftentimes it's easier to adjust this to have either payments or deposits and do this one by one, because that's how the bank statement often is. So here's the deposits over here. We could find those first and then find the withdrawals. Otherwise, your eye just kind of goes back and forth between the two columns, and that can be a little bit more difficult. So no matter, even if your bank statement isn't formatted in this format and your debits and credits or your deposits and checks are both on the same line, you may want to do all the deposits first and then do all of the checks first so that you know which way you're going and keep everything as straight as possible as you're doing this. So I'm going to close this back up and I'm going to change this just to payments. Now you also have some other kind of filtering options which could be useful, meaning you could filter by date. You may not want to have anything that's going to be past the date of our reconciliation, meaning I don't really need stuff in there that's going to be past January 31st because this is a bank reconciliation as of January 31st, and if I wrote a check after January 31st, it should not have cleared the bank. So I should be safe to pull out anything that's in February because it shouldn't be part of the report. So you have those filtering options and some more filtering options, but the main ones are going to be these items. If you filter through those, that's usually a good way to go through this. Now, when we look at the payments, we have a little bit more option than we do with the deposits, meaning we have the check, we have the reference number, which is the check number, we have the account, which it's not going to be on the bank statement, that's not going to help us much, and then we have the payee, and then the memo, and then the amount. So the amount and the check number will tie out, and those are two great indicators here. The date you would think would be a great indicator, but note that the date will never tie out because the date is always going to have to be sometime later than what we put it in our system for on the bank statement. So if we wrote this check on 1/4, it would have had to go on to somebody else. They would have to receive it. Then they'd have to go to their bank and deposit it. And then their bank would have to talk to our bank before it's on the bank statement. And so it's always going to be a bit later. So the date could help, but it's not going to be as useful as you would think. The check number is really helpful, and the payment amount, of course, is what the main thing we can tie out to. What we'll do now is a lot of jumping back and forth between this screen, our QuickBooks screen, and this screen, which is our bank reconciliation. What we're focusing here on the bank statement, is this items, and we're going to look at these and just tick and tie them off. And as we find these items on the bank statement, we will highlight these. What we're doing is we're really trying to tie this to the bank reconciliation. And that's a subtle but important distinction. We're really going from here, the bank statement, to the QuickBooks file. So you're going from here to the QuickBooks file, not necessarily going from the QuickBooks file back to here. So you could kind of go back and forth, but we're really trying to find these items on the bank statement. And if these items, remember, are not on the books, on our books, then we're going to have to add them. So here's this amount. We've got the date of 1/14, not going to help us too much, but the check number and the amount, 12,000 and 1001. So here's the amount, here's the check number, and the date's going to be different. Notice it's always going to be further up on the bank statement. It's going to be later all the time, I should say, on the bank statement. So we found that. So I'm going to highlight this item. I'm just going to make it green and say check that off. If it was a paper pencil, we just check it off or highlight it and then check it off here that it has been found. And again, I'm going back to the bank statement, and we're going to say here's this item, 1002, 16,000. We're going to go back here, 1002, 16,000. Again, the date's going to be different. That's okay. We're going to check that off. And then I'm going to go over here and highlight this. Say we found that. Here's the 1003, 7,000 on the bank statement. Going back to the bank to our books, we see the 7,000, 1003. Also note that I might have messed up the terminology a few times here. If we go back here, I would consider this to be our books. This is our register, this is our books. I might call it the bank reconciliation sometimes, but this isn't actually the bank reconciliation. This is what we're going to use in order to generate the bank reconciliation. So if I mess up that terminology, this is the reconciliating process, the reconciliation tool that we're going to use to create the bank reconciliation. That'll be an actual report that we'll see at the end of this process. So we're going to go back over here and we're going to say that we found that 7,000, and this is a tedious process. I know if you have a long bank statement with a lot of transactions, this takes some time, but it's not too bad. Even with a lot of transactions, it doesn't take too much time. And it's really a huge internal control, so it's worth doing most of the time. So we got 1004 and 400. So if we go back over here, 1004, $400. Again, date different, that's okay. We're going to check this off. Then we're going to go back over here and highlight that and say we found that one, that's good. And then we've got the 1005, 598. So we're going to go back over here, 1005, 598, check that off. Again, these are written on the 25th and they cleared on the 31st. And note there's no rhyme or reason as to how long it takes. If you're wondering, well, what's going to be the difference between the date on our books here and the bank statement? You can't just say it's going to be a week or so because it depends who's you're giving the check to. They might hold on to it for like a month. They could hold on it 4 months and then cash it sometime down the line. So you really just don't know. Or you could give it to someone, they're going to go right to the bank, cashed out right away. So it'll always be later, but we never know what it's going to be. It's always going to be later on the bank statement than the books, but we never know exactly when or what. So we found that 598. Now we're looking for 1008 at 260 at 620. So notice we're skipping some. We didn't see that. That's okay because I'm going from the bank statement to the books, not the other way right now. So we're going to skip these. We found this one, the 620. Checking that one off. And these are not going to be in our calculation here because what we're really trying to do is figure the difference here between these two items. And we're going to tie those out, and the ones that we don't check won't be in that process. So we started off with 25,000. We're going to get to this 109,415 by checking off everything that is in this calculation of 25, and then these items that are making up these differences to get to that. Okay, so here's this one. We're highlighting that, making it green. Next one is on 1010, 15,000. So it's not on 1010, and the check number is 1010. So going back here, we see the check number 1010. Again, we're skipping a few. We're down here. This is the one. We're going to check. It should be this one. Let's check that one more time. It should be 1010, 15,000. Note that something went wrong with the check number here because this one had a pay bill and the check number wasn't assigned, which is what went wrong. But then we kind of have to go by the amount here, and we might want to check that out and say, something funny happened. Let's check that out. And once we verify it, well, the check number, it must have been the check number. This bill check didn't print because we are recording this and we're writing the checks outside and then entering the check numbers here. So it's possible for our check number to get out of whack, as opposed to if we were actually printing the checks from the system, that wouldn't happen. So then we're going to say, oh man, it's off, but that's the right one right there. And then I'm going to go back and say we found that one. And then we've got these two items which we're not going to find, because if we go back over here, I'm going to say, I don't see the 80 or that other two. And that means that these I'm going to highlight as yellow. I'm going to say that's not there. And we know that's going to happen because, we know this one's going to happen because I don't know how much the bank's going to charge me until they took my money already and told me that they took it by giving me the bank statement, which shows them taking the money, right? So and I don't know that happened. I know that I'm going to have to reduce my books for that. So we're actually going to have to make a journal entry reducing our books by that 15. And then this is a withdrawal. So I'm kind of imagining that we took money out of the bank and we didn't tell the bank, or we didn't record it in our books, and we don't know exactly possibly what it's for. And therefore, that's the other 80 that we're dealing with there. So those two we're going to have to deal with. We're going to have to fix our books. So we're not going to be able to check that off. We're not going to be able to reconcile until we make a journal entry, until we record, until we recognize the fact that we do owe this money and we took that out and we're not going to get it back. So we've got to reduce our checking account by that. That's the benefit. One of the benefits of reconciling is that we reconcile and understand that we have those transactions we have to record, which we would otherwise have missed. Now we're going to do the deposit side. We're going to check these off. So if we go back over here, I'm going to go from payments to deposits now. And here is our list of deposits here. Here are our list of deposits here. Once again, we're going to go from the bank statement to the books. Now note that we have a little less to go on here because we don't have a check number, and we know the date doesn't help us too much, but the date should be a lot closer for the deposits, because if I went to the bank and made a deposit, it should only take a day to like 3 days for the bank to clear that, because it's my bank, it's our deposit, we deposited it at that bank, as opposed to a check that went to somebody else who went to some other bank and then had to cash the check. So the deposit, the date is actually a lot more helpful than the checks. It should be pretty close. If it doesn't clear within 3 days, we could probably go to the bank and ask about it. Whereas the check could take like a month, and we might not know. So we're just going to go by date and amount. Also note that we're hoping that this grouping matches the grouping with which we entered the deposits into the bank account in our books. And the undeposited funds, remember, is what helps us to do that. We put in the undeposited funds, then we went to the bank and grouped them all together in the proper grouping. And that's going to hopefully help us to tie out to what the bank statement says. So here's the 50,000, and we're going to go back over here, and here's the 50,000 there. And so we're going to check that off and then go back here and say we found that one. So I'm going to make that green. Here's 65. I'm going to go to here, look for the deposit. Here's the 65. Looks good. Check that one off. I'm going to go back to our statement. We're going to highlight that. Here's 628. We're going to see if we could find a 628. There's the 628. We're skipping this item. That's okay. And we check that off, and going back, we found the 628, highlighting. And then we've got the 20,500. Going back here, we're looking for the 20,005. There it is. Okay, there are our items. Now we've got this one item, so we've checked all those items off. And we don't see this item here, and that's okay. So now we can check from, well, note on this side, we found this item. The only items we found we have not yet found on the bank statement on our books are these two. So that's 80 and 15. 80 and 15 is 95. That's our difference. That's what we're going to have to fix in order to reconcile properly. Now, we then can think about, well, what's on the books that's not on our bank statement? What's on our books and not on our bank statements in terms of deposits is this item that happened in January, and it was $955. There's a deposit on the books, not on our bank statement. Those we're not going to have to do anything about because we're assuming that that is because of a timing difference. That's going to be our reconciling item. That's going to be what the difference is between the bank balance and what's on our books, what we saw on the balance sheet. So that's one of the differences that are there. Now, if we're worried about that, we're trying to say, why didn't this clear? It's been 3 days. It should have been, we had deposit on the 28th, 29, 30, 31. Then we can go to the bank and say, hey, is this going to show up on the February bank statement? Did this clear in February? And if it does, if they say, yeah, if we see it in our transactions in February, then it's okay. It's just a timing difference. It'll be on the bank reconciliation. We'll see that once we reconcile. On the payments side, if we scroll down, we've got a lot more of these. We got this one was on 128, didn't clear, didn't clear, didn't clear. 3 checks, 1006, 1007, and 1009. But again, they were all kind of towards the end of the month, and a check could take a lot longer not to clear. It could be like a month, depending on who we give it to. If we give a check to someone who doesn't typically deposit very regularly, then if they hold on to the check a long time, then it could very well be that these haven't cleared. We're not too worried. We may not be too worried, depending on who the recipient is of these checks, that they haven't cleared yet. If we want to know if they've been cleared or not, or if they're still outstanding, again, we can call the bank and say, hey, in February, did they clear? Because remember, it's sometime past January 31st at this point that we're doing this. And so we can call the bank and check it out, see if those have cleared yet, and then take a look at that. So those we're not worried about. We need to reconcile this difference, that difference being made by what's on the bank statement, the 80 and the 15, that's not on our books. So we got to enter that. So we've got a withdrawal and we've got a bank service charge. So what we're going to do is we're going to go back to our accounting over here. We're going to go to the chart of accounts. And then we're going to go into our checking account, and we're just going to enter this information into the register. So we've got our checking account. We're going to select the register, and we're going to add a new information to the register. If we select this drop down, we got a few different options on what exactly we want to put in place. We could make a check, but it's not exactly, we're not going to have a check number. So we could try this expense item down here because it's not going to have a check number. So we're going to have an expense item. I typically make these as of the end of the month that they're in. So I'm going to put the date of 01/01, the end of the month, 31/21, January 31st, 2021. No reference number. Sometimes you can put like other or online or something like that if you want to reference the fact that it's on the bank statement. The payee, I'm not going to put a payee. It's going to be the bank. You could put your bank like Wells Fargo or Bank of America or something like that. Memo, again, yeah, I mean, you could put the memo. I'm going to put this $80, but we don't know exactly where it's going to. I'm assuming we took out the 80. We spent the cash somewhere, hopefully business related. We're going to assume it was business related, but we don't know exactly what it was. So I'm going to put that there. I'm going to say the payment was for $80. Okay, and then the account we're going to have. Now, then again, if this $80 that we spent here, if it was pulled out for personal use, if we think we took it out of the business account for personal use, we shouldn't put it on an expense. We should put it in something like draws, and that will not affect the income statement. If, however, we believe that we took it out for business purposes, then we should put it to some type of expense. If we don't know what that expense is, we might put it into something like miscellaneous expense, which is what I'm going to do here. We're going to put that into miscellaneous expense. So I selected the drop down and typed in miscellaneous and found and got miscellaneous expense. It's in the other expense category down here. If you don't have that, then of course type it in there and you can add that expense as we go. So we're going to save that. That's the one transaction. Now the other thing that happened is we had bank service charges. So bank charges. So I'm going to say the same date. Again, I'm not going to put any of the memo here. The payment was 15, and we're going to put the 15 here, and it's going to be something like bank service. I'm going to select the drop down, and then I'm going to type in bank, and then we got bank charges. That looks good. So I'm going to say bank charges, and that's going to be the one. And make sure to save it before you go anywhere else. We're going to save that information, and there are those two items. So now when we go back to the bank reconciliation, we should have those reconciling items there. So I would typically then go back to our accounting and the reconcile here. So I went to accounting on the left, and then we went to the reconcile item, and we see the checking account, and we're going to resume the reconciling. So I'm going to resume reconciling. And then we want to take a look at mainly just the payments. So I'm going to go to the payments. And we should have two new payments that are now appeared here. So if we scroll down, we've got this 15 and the 80. That should make up our difference of the 95. So we're going to select the 15 and the 80, bringing the difference down. Now you might be thinking, well, 15 isn't that much compared to this thing. Why couldn't we could have forced it to kind of reconcile without that. Note that you'd really want to get it down to like the dollar if you can, because if you don't, then you're kind of defeating the purpose of the bank reconciliation. Because if this number is off from our bank statement to the books by anything, even if it's just $1, it may not just be that there was one deposit or one check for $1. That's probably not the case. We probably didn't have a check or a deposit for $1. It's probably the case that there was a check and a deposit, or multiple checks and multiple deposits that didn't get checked off. So if it's exactly on key, then that means that everything that's on the bank statement is checked off, and that gives us a really good verification that everything else is in there properly. If we're off even by just $1 or so, it could very well be the case that that dollar represents multiple things that are throwing us off, meaning multiple transactions that we may not be recording correctly. So if you're forcing it to work, then you're kind of defeating the point, the purpose of it. If you get it exact, then it's really a good indication, and it has to work. So because the beginning balance tied out, and we're just checking everything off from here to our books, and if it's not on our books, then we're adding it. So it has to work because it's the same numbers. The same numbers are here as are the ones that we're checking off, and if they're all the same numbers, they have to add up to the same amount. So that's going to be that, and we can go ahead and reconcile now. So we're going to finish this item. So we're done. We're going to finish this. This isn't the bank reconciliation, by the way. This is just a worksheet to create the bank reconciliation. So it says success, you're reconciled successfully. We're going to view the report now. And here's the report that we have. So we've got the statement beginning balances and the checks and the deposits, and then here's the cleared balance. That's going to be, in essence, the bank balance. That's our bank balance as of the end of the month. So that's going to be that. And then this portion right here is really kind of the essence of the bank reconciliation, meaning this is on the bank, this is our books, this is the register balance. This is what we saw on the balance sheet when we first started. That's what we recorded. This is what the bank recorded. The difference then is this 15,073. Those are the checks that we didn't check off. Those are the checks that were written in January that we didn't check off. And we know exactly what those are because those are the things that we didn't check off. Those are the things that we didn't say, hey, these are specifically items on both our books that tie exactly to the bank statement that were still done in the month of January. That's exactly what the difference is. So we know exactly what that difference is now. And then they like to give us the current data as well. So these are going to be transactions that are after the date, which isn't the main thing on the bank rec. This is really kind of the main part of the bank reconciliation. And then we're going to have the details down here. So if we look at this number here, the uncleared balance 15,073, then of course the question is, what does that consist of? And if we keep scrolling down a bit, it's going to be the uncleared checks and payments as of 1/31/21. Here's the 16/29/33, and then the uncleared deposits. So the real difference that we're looking at is going to be these two items. Here's the checks, 1629.33 minus the deposit of 955.50. That's the 1573.83 that we see up here, 1573.83. So that's the main thing we have. All the rest of this, these three numbers and that detail is really the essence of the bank reconciliation. This stuff is just added information that could be useful, but this is on the bank statement. We don't really need it here. This is on the bank statement. We see that here. And then this is the bank statement number. And then this is on our books. We see that on our books. What we're really after is this number here. And that's going to be the reconciling items, the items that have not cleared. Now this gives us the more detail up top. This gives us the checks and payments cleared. This is what has cleared during the time period. Again, these amounts are going to be on the bank statement. So that's not the main piece. These are the deposits that have cleared. Those are on the bank statements. These are the uncleared items. These are the items that if we want to check and see if they should have cleared, they should have cleared in February, the second month, the next month. And we can go and check that out. And then these are the uncleared deposits that we can go and check out. So those are going to be the major items we're looking at. And then we've got the uncleared checks. Again, these are going to be after 1/31. So now we're going to go ahead and print this out and finish this up. So we'll go ahead and print this item. And we could print it in a couple different formats. It might not give us the nice Excel format to export. So I'm going to go ahead and print it as a PDF file to the PDF writer. So this is one type of file they have. They have this with QuickBooks. If QuickBooks doesn't give it to you, you could download something called the Qt PDF printer, which is a free download if you were to Google it. Really useful to have a PDF printer so that you can use the printing option to actually print a PDF file, a kind of digital printed file, even if they don't give you that option to get a PDF file. If they let you print it, then you can print it to the PDF file if you have a PDF printer. And so one of those that's free is called the Qt PDF printer. I don't promote them or anything or get any money from them, but that's useful to use. So we're going to say print that out. And it might take a little while sometimes for it to generate. Then it should give you your searching items. We're going to see where to search. It's a little bit different of a layout. We've got the drop down up here to find where we want to put it. I'm going to put mine in this docs9 file. So I'll put that there. And it gives me an untitled, so I'm gonna title it bank rec, and then it's gonna be 01/31/21. I'm gonna call it. We'll save that, and that'll be the activity. It's often useful, actually, really to save this some type of copy of the bank reconciliations, because sometimes the system won't let you go back into those reports and change the dates and find those reports. So this is one form that you may want to have some type of digital or hard copy that you save outside of the QuickBooks system. Hello, in this presentation we will create a bank reconciliation within QuickBooks Pro 2018. As we do this, we will be working with the first bank reconciliation for a new company, which can cause problems when we have that first bank reconciliation. So we'll discuss some of those problems and how those problems can be fixed. If you've been following along with us, we will be continuing on with the Get Great Guitars problem. If not, that's okay. We will be doing a bank reconciliation, the first bank reconciliation for the company, and looking at problems related to finishing the first bank reconciliation. If you have the backup file up to this time, you can say File and restore the backup file, that giving us the data so that we can reconcile that data. If you've been working through the problem, we should have similar data, but the backup will get you right to that point to make sure we're on the same page. We have the Open Windows open. To open the Open Windows, go to the View tab, and we want to select Open Windows List. And the only open window is the Home tab. To open the Home tab at here, Company Home Page. That is where we are at. What we're going to do this time, what we have done so far for this project, is we have entered a new company. We're a merchandising company. We put all the beginning balances in there prior to the 1st January that we are going to start operations, which we're saying is January 2021. And then we entered data for January and February. We have not yet reconciled either January or February. We're going to say now we've got the bank statements, and we're going to go ahead and use those bank statements in order to reconcile the bank accounts. This is going to be one of the most important things that we have to do in terms of the double entry accounting system to make sure we're doing things correctly. Cannot emphasize this enough. If you can reconcile the bank accounts, then you have some pretty good assurance that you have the information into the system. It may not be in the system totally correct. It doesn't mean there's not errors. But one, the system is giving the check of having the double entry accounting system, meaning debits will equal to credits or assets will equal liabilities plus equity just by using QuickBooks. And then if we can reconcile on top of that, that means that an outside party, that means that the bank is actually checking and verifying every transaction that we have that goes through cash. And cash is going to be involved in any of these cycles, whether it be the vendor cycle, customer cycle, or employee cycle. The timing difference will be different because we are on an accrual basis. But by us reconciling the bank account, we're really giving a check not only over our checking account, not only over just our cash account, but also giving some verification over every cycle in the process. And therefore, the reconciliation is not just a check to see if the bank made an error and make sure that the bank didn't make an error. It is a huge check against theft happening and problems of that nature, but it's also a huge check just in terms of everything, every system we have. So it's our second biggest control. If you're using QuickBooks and you're putting all the data within it and you're able to reconcile, you can have some pretty good assurance that at least the data is in there, and we have some pretty good numbers that we can work with. So in order to do that, and by the way, if you don't have the bank reconciliation reconciled, then a lot of times I wouldn't have a whole lot of faith in that all the data has been input to the system or that it's all been input correctly. It may be, it may not be. Most likely there are problems and there are errors. We'll still have some information that's relevant in using the double entry accounting system to input that data, but this check is pretty crucial to really have trust in the financials. So let's take a look at what we have so far. We're going to go to Reports, we're going to go to Company and Financial, and we're going to scroll down to the Balance Sheet. And we're going to put the date here. It's going to be 01/31/21. So that's the end of the first month that we have operations in. Now we're going to compare this number in the bank statement to this is our books, to the bank statement. So what we're going to have, of course, is a bank statement by the end of the year. And you would think that if everything was done well, that the number would equal on the bank statement this $94,436.17, and everything would be great. And we would have a verification from the bank that that number is indeed the correct number as of January 31st. However, it's never going to be the case where that number is the same unless we have very few transactions, because there's always going to be some timing differences. So if we think about our personal checking account, if we wrote the rent check today and then we went to the ATM and checked our deposit and it didn't include that $500 or $1,000 rent check or whatever, then we're pretty confident that that amount that's in the bank is wrong by the fact that they haven't yet received that outstanding check. And that's going to be the case where we're always going to have a difference in terms of outstanding checks and possibly outstanding deposits, meaning checks take a while to clear, and therefore when we write a check, when we send a check, then someone else has to receive it. They have to put it in the bank, and then the bank has to somehow talk to our bank or get to our bank to talk to it in order for our bank then to process the check being withdrawn from the account. So what we're really going to do is we're trying to narrow down the differences to just being those differences in outstanding checks. And if we can do that, then we can say that everything else is correct in that we have a double check by a third-party bank checking off every other check that we have written. So our goal here is to reconcile the difference between this checking account and whatever it says on the bank statement. And by doing that, we're not really looking for those differences just to find the differences. We're trying to find the differences in order to then say that everything else that has been input thus far is correct. And that's what we're looking to do. So let's take a look at the bank statement. Here is an example of a bank statement. So we're going to have the bank statement for January 31st, 2021. Typically, we're going to have a recap on the bank statement. We're going to say this is from the bank. Obviously, this is an imaginary statement, but this is a bank statement. We're saying from our bank. And it started off with $25,000. That's the beginning balance that we'll have in the bank statement. And that's really what we started off with. We entered that amount into our checking account as a beginning balance, but that's one of the issues oftentimes people have when reconciling the first bank account. So we'll talk about that beginning balance. Then we have the additions and the withdrawals and subtractions, giving us our ending balance. Therefore, this is our ending balance for the bank statement. We had $94,436.17 on our books, and that's going to be the reconciliation as of the end of the month. What is the difference between those two? And we're going to find and try to narrow down that difference to just timing differences. Then we have the deposits by date. And then we have the checks by date and also by check number. So we can check these off in a couple different ways. We got the check number and the amount and the date. And then we have some other things that aren't checks that are going to decrease our deposit. Here we just have withdrawals and bank charges. We could have other items down here like non-sufficient funds and other types of items that would be down in terms of other types of transactions that would decrease our bank account from the bank statement side. So our goal is to reconcile these two amounts. So let's go back to QuickBooks. Remember that this $94,436, that's what we need to reconcile to the bank statement's $109,415. In order to do that, we're going to go to the banking up top and we're going to reconcile the bank accounts. So we're going to go to reconcile. This will be our reconciliation screen. We're going to reconcile as of the date of January 31st, 2021. That's the first month that we have actually started inputting data. We then have this $25,000 as the beginning balance. That's the beginning balance we set in our checking account as we set up the checking account. This is one of those points that if we had not set up this $25,000, we could try to go back in now and set up the beginning balance, that balance being the balance from our prior bank statement, meaning it should be the ending balance on the 12/31/2020 bank statement, and that then is where we're going to start from this point. So we need to have that beginning balance in there either in this form here, or note that we need to include it in the check register at some time, typically before the date that we're starting to input data into, so that it doesn't affect our income statement on the current date or any of the balances on the current date. It just gives us the bank balance as it needs to be in accordance with the bank statement. And then we can check it off when we go through the checking off process. So it needs to be in one of those formats, either here in the beginning balance or input into the check register so that we can check it off as we go through the process. That's one of the tricky parts of doing the first bank reconciliation. Once it has been completed, once you've done the first bank reconciliation, the beginning balance should always be the same as long as we've completed the process correctly, because we will end off with the ending balance of the prior bank statement, which will always equal the beginning balance. So we have some assurity, and you'll be very confident with that once you start doing the bank statements a few times. But the first one, oftentimes we don't have a lot of confidence with it when we're first, learning the first bank reconciliation. Okay, and of course the first one is the most difficult technically as well. What we're going to do now is put the ending balance from the bank statement. And remember, that was 109,415. We're just taking that number directly from the bank statement as the ending balance, the bank statement being what we received from the bank, giving us that ending balance. This other information, we have a service charge. Oftentimes we might have service charges. We saw that we had bank service charges of 15. We could input that here and record that, but I recommend not doing that because it kind of muddies the waters when we're trying to figure out the reconciliation. It's easier in some ways to just put that in place in the register or some other format so that when we reconcile, we can check it off. So that's what I'm going to do. That's what I'd recommend doing. We could have interest as well, meaning we might have earned interest on the checking account, and we could input this here. But again, that might make the reconciliation a little bit more complicated to understand. Therefore, I recommend just putting in the interest as a journal entry or into the register so that we can see it in this process, and that will make more sense once we do this. So I'm going to say continue now, and this is what the bank reconciliation screen looks like. So we have on this side the checks and payments. So this is everything decreasing our books in terms of cash, and we have the date, we have the check number, we have the payee, the amount. And the check number and the amount are really the most relevant, and then of course the date. However, the dates are not always going to follow through the bank statement because of those timing differences, whereas the check numbers and the amounts should tie out exactly. On the deposit side, we have the date, and really the only other relevant item is the amount. And so that's how we're going to have to check off the deposits. Now, typically there are less deposits, so they're going to be easier to do, even though we don't have that added set of data being the check numbers for them. At the bottom here, we have our reconciliation. The difference right there, that needs to be down to 0. Once that is at 0, then we should be reconciled and everything is good, meaning the difference between our books and the bank has been reconciled. So what this is saying is that this 25,000 is what has currently been cleared. That's our beginning balance. And if we are able to check everything else off in terms of everything that's on the bank statement to what's on our books, then this balance should go down to 0, and we should have found the difference, and that will bring us in balance. So we're looking for the cleared balance to equal the ending balance of the 109,415. As we do this, I'm going to try to put this side by side as much as possible, but not make the screen too small as much as possible. So here's our book balance. Here's the bank reconciliation. Here's QuickBooks. Here's the bank statement that we're looking at, or part of the bank statement. And what we need to do now is just all we do is go through this and tick and tie out to just check off the bank statement to the books. So we're just going to find each amount on the books and tie them out to the bank statement and check them off. Anything that hasn't been checked off will then be the differences. What's going to happen in practice is we're just going to say anything that's on the bank statement, typically, if it's on the bank statement and not on the books, usually that's something we need to adjust on the books. Usually that's something we need to fix on our side. For example, we have down here the service charges and the bank and the withholdings. Those are not going to be on our books yet. We haven't input them yet. Those are things we're going to have to fix. So we're going to actually go into the check register and fix those as we see those, when we see those differences. If on the other hand, it's something that's on our books that's not on the check register, not on the bank statement, I should say, then it's most likely something that is outstanding. And that means that it should be okay because it's going to clear in the next month in February. And we'll see if that is the case when we do February's bank statement. So those are just the timing differences. Those will actually be the reconciling items that we're looking for. So if we go through this, on this side, we see the checks. So this is going to be the first things we're going to check off. Here's our check numbers on the bank statement. We have the date, we have the check number, and the amount. Here we have the date, the check number, and the amount. All we're going to do is tick and tie these off. I'm going to have to try to do this side by side as best we can. So here's this one. If I had a highlighter, I'll just highlight this whole thing. I'm going to say, we have found that, and there it is there, and then check it off on this side. Next one, we see the 16. I would highlight that and check it off on this side. Next one, we see the 7,000. Note the dates are not the same because they cleared later, always going to be later on the bank statement, but the amounts are the same and the check number is the same. So all we're going to do is just say, we found that one, check it off. Next one, there's the 400, there's the 400. We found that one. We're going to clear that off. There's the 598. There's the 598. We found that one. We're going to go ahead and check that off. And then I don't see this 11. I see the 620. That's the next one we have, number 1008. So we're going to check off the 620 and skip those other two. Found that. And then we see the 15, that's going to be down here, check number 1010. So we find that. And there are the withdrawals. Now, we don't see the 80 or the 15 over here. That means we're probably going to have to fix it. And we see these other checks that were written in January. This check number 1006, 1007, 1009. Those are in our books, but not over here. But we're not overly concerned with those because it looks like those were written at the end of the month, and therefore we're going to have to check them off probably next month. So if we were concerned about those, especially like this check here, we might want to make sure that that has cleared. We can call the bank and say, hey, did that clear in February? If it had, then it's just a timing difference, and we're okay with it. We'll pick it up on the February bank's reconciliation, as we'll see. Let's take a look at the deposit side now. Here is the deposit side in QuickBooks, and here's our bank statement. So we're just going to go through the same thing. So we got the 50,000 here. We see that, so we're going to highlight that and check that off here. We see the date's different again. The date is going to be different than the date here, but the amount is the same, and so we're going to have to basically go through that. It should be easier for us to tick and tie these out, even though we don't have the extra reference of the check number because there's fewer deposits, and we grouped them properly, hopefully. So they'll be in the same grouping in the bank statement as we go through this. That's part of the benefits of grouping the deposits together and going through that undeposited fund process in the when we enter the deposits. So here's this number. There's the 65, there's the 628, there's the 628, there's the 20,500, there's the 20,500. So we have found all that, and if we look at our reconciling item then, we see that we're off by 95. That 95 is the difference from our bank statement that we haven't yet found a home for, because they haven't been input in our system yet. So all we need to do is find a home for these. We need to input this item into our system, and we should be okay after that point. Note that we do have this deposit on January 28th that didn't clear here. It's not on the bank statement, and that might be concerning. We might want to call the bank and say, hey, did that clear? As of the end, it's been 3 days. Did it clear in February? If it had, that's okay. Then it's just a timing difference. We're just going to reconcile it, note that it is a timing difference, and move forward. Now what we will do is take this 80 that is on the bank statement and enter it into our books in QuickBooks. There's a few ways to do this. I'm going to do it what I believe is the easiest way, and that is by the register. So we're going to select banking. We're going to go down to use register. And it automatically opened the checking account because we have the bank reconciliation open. And I'm going to enter it as of the end of the month, 01/31/21 being the date. It's not going to have a check number. I usually put something else like other in there, some other reference number. And I don't know who the payee, it looks like a withdrawal that we had. So we might have gone to the ATM or the bank and pulled out money and not reference where it was going to. And so we're going to put 80 is the amount that's going to have to be decreased. Now we don't know where it might have been a draw that we took money out of the business checking account for personal use, or it might have been a business expense that we pulled money out. We're going to assume here that it is a business expense that we used the money for. This is one of the things that we have to go through when we see these differences on the bank statement from our books and enter them into our books. We know that the cash account needs to go down, but we also have to have some other account for our reconciliation process. Typically, it would be some kind of expense if there was a decrease on the books. It might be draws, however. So if you took the money out, if we took the money out for personal use, we should select draws or the capital account so it's not decreasing our net income because it's not really part of the business operations. And if it's, so in that case, we would use the capital account. So if it was a draw and you were looking for a draw, we do have an owner's draw. You can put it in there. If you don't, you can put it into the equity account. You don't want to put it into an expense because that distorts your income statement. It puts personal expenditures on the income statement, which we typically do not want to have there. We're gonna assume that it was for the business, but we don't know exactly what it was for. So I'm gonna make an account. Our favorite account is a miscellaneous expense, and this is where we're gonna put expense items that we don't know where to categorize, or they're too small for us to categorize them into another grouping or category. So we're going to say tab, and we're going to set that up. It's going to be a setup. It's going to assume that we want it as an expense account. It is correct. We want it as an expense account. So we're going to keep that. Everything else will remain the same, and we will save and close. Now, in order for it to record, we have to select enter. So we're going to enter, and there is that item. If we then go back to the bank reconciliation in our open windows, it should appear there. There is the $80 right here. Just going to check that off. Now we're even closer. We're only $15 off on our reconciliation. That 15 is, of course, this bank service charge. So that's going to be the next item we're going to input into our check register. Going back to the check register in our open windows, we're going to select 131 again. Once again, I'm going to select other. And we could put the bank name, but I'm going to leave it blank here for the payee. And we're just going to put the amount of 15. And then I'm looking for a bank service charge. And this, we do have a bank service charge here that was set up. So I just type that in there. We have it there from the setup when we created the QuickBooks file using their chart of accounts, that chart of accounts being for a merchandising company. So QuickBooks will set that up. If not, then you can go through the same process, bank service charge or service charge of some kind, and then add that account, make sure it's added as an expense type. And once again, we want to make sure that we select enter so that it does record. Otherwise, when you go to the bank reconciliation, you will not see it. And then we're going to go to the bank reconciliation, open windows. And then we should see that 15, there it is, the 15, and that will put us back in balance. That's going to be it for the checking these things off. We're going to finalize this, but before we do want to point out that this is a bit more simplified than some cases may be if we had not just started the bank account right before we had the first month of operation. Meaning, if we didn't just start writing checks in January, the first month of operations, we may, and most likely do, have checks that were written in December of last month that are clearing this month because they have not yet cleared. In other words, we're going to have outstanding checks and possibly outstanding deposits as of the prior month. So in this example, we started off with a beginning balance, which we could get from the bank statement, and we would get from the bank statement of last year of $25,000. That's fine. We can enter that beginning balance. We put that in the beginning balance window. If we had not had it in the beginning balance window, we could just put it in as a deposit before the month that we are starting, and then just check it off on this side, and we'll still be reconciling. However, if we have some outstanding items that we wrote checks for last month that are not included in the first check that we wrote in this first month of operations. In other words, if this check right here of 1001 is not the only check that cleared, or not the first check that cleared in January, but there were checks that we wrote in December which had not yet cleared the December bank statement but were outstanding, then we'd have to enter those here because those outstanding items would have to be checked off here. In order to do that, all you'd have to do is go to the checking account and then enter those outstanding items here. Just make sure that the date is before the current date of operations. It's in December in this case, and that way it'll record it as of December, and any expenses related to that will then clear off in December. It won't affect your income statement in the current month that we are working in, and you can just enter that data. If you wanted even to enter it as a lump sum data for all the outstanding items in order to reconcile for that first month, you can do that, although putting the detail in of each check that is outstanding would be the preferred method. This first reconciliation is the most difficult because of that problem, these problems of having these outstanding items and putting that beginning balance in place, especially if you are working with a checking account that had not been started. It had been in place, in other words, before we started using it to reconcile our books within QuickBooks. So you want to enter those checks. Once you would enter those checks as of December of 2020 in this case, then you would go back to the bank reconciliation and you can check those off, and those will be the differences that you will need in order to remain in balance. If that doesn't quite make sense to you, wait till we get to the next month, and that might help out with that process, because we'll have that same issue here in that these checks were written in January, but they're not going to clear until February. So when we do the February bank reconciliation, we will see that these items will clear in February. We will have to check them off in February, even though they're in our system in the books in January. So we're going to go ahead and finish this. We're going to reconcile this item. Note that if this is not 0, it's going to give you an error sign and say this is not reconciled, and it's going to ask you if you want to force it to reconcile. I highly recommend not forcing it to reconcile most of the time. Maybe you have to on this first bank reconciliation, but by forcing it to reconcile, it's going to make it do a journal entry. And when it does that, it really defeats the purpose of the bank reconciliation, because again, you have no assurance that everything is checked off, that everything is input, because you don't know exactly what that difference is. And it could be a combination. If this is off by $5 even, it's not just that your cash is off by $5. It could be that you have a deposit of, say, this $12,000 that's off, and then a bunch of checks that are not in there, and it could be a significant difference that a combination of things that are a problem, throwing your balance off by only $5. If, on the other hand, so any balance that you have that is not completely reconciled really declines the level of assurance that the bank reconciliation gives. So you really want to look at it, and if you have the beginning balance that's the same and you're able to check everything off, it really should be not too difficult to check everything off and bring this into a reconciling point. And if you have to go in and adjust things, you'd rather not adjust it here. You'd rather not force it to make a journal entry. You'd rather go in here and do whatever you got to do, like record that, for example, our $80 to the miscellaneous expense that we didn't know exactly where it went. We'd rather go in there and recognize it and put it to miscellaneous rather than just allow QuickBooks to force the journal entry for us. So keep that in mind. We're going to say reconcile, and it's going to say QuickBooks is giving us some information about the services. So I'm going to say OK here. Now, when we have this screen, typically you can print this. You really want to print these in some way, probably just as a PDF file, but you want to have them printed in some format, because once you reconcile multiple, you can't really go back to these reports as easily oftentimes as you can with other reports. So that means that you want to have the hard copy of the reports, so that if there are problems, and there could be problems later on, if we say delete checks or something like that, then you want to have this detail. So you want to have at least the detail, so you have the detail, and I usually say both, the summary and the detail. So we'll take a look at both. So let's display them. So I'm going to say display and say OK, and then we're going to print these or export these if they allow us to export them to Excel. So here we have the bank reconciliation. This is the summary report, and what we're saying here is we've got the beginning balance is the $25,000. Then we have these checks here. There's 9 of them that have cleared, and the deposits 4 have cleared. So that gives us the total cleared transactions to 84,415, giving us the 109,415. This is the cleared balance, meaning these items have all passed, they've all cleared the bank, and have been checked off in our system. That then is the bank balance. This here, that's the bank balance. What we're looking for is the difference between the bank balance now and what we currently have. If we go back to our balance sheet in the Open Windows item, we see that our checking account is now at $94,341.17. We adjusted it slightly for the $80 withdrawal that we just input into the checking account and the bank service charges of $15. If we go back to the bank reconciliation summary, we see the $94,341.17 here. That's the register balance. The difference between this 109,415 and this 94,341.17 are the outstanding checks. There's 5 of them at the $16.29 and the deposits of 1 of them outstanding of $9.55. So this is exactly what the difference is in terms of these 5 checks. That 1 deposit have not yet cleared. That is our book balance. That's the bank balance. This is really the reconciliation portion of this report right here. That's what we need to do. And then we have the new transactions. This is saying that there's 12 checks and payments that are new and deposits and checks that are new. This giving us the ending balance, our latest balance. In other words, if we go back to our balance sheet over here and we go to our latest point in time, changing the date, for us, we can change it even to the end of the year, 12/31/21. Then we're saying our latest balance is $99,115.56. So that's going to be where we are at the latest point in time. So if we go back to our bank reconciliation, that's the latest point in time. So as of January 31st, this is really what we're looking for. If we double click on this, we don't have the drill down features here. So note that you don't have the drill down features to get these 5 checks or this 1 item. So that means that you do have to have the balance detail. And so I highly, highly recommend printing out the balance detailed report as well. So we're going to go ahead and export this by going to reports up top. We're going to create a new worksheet. And then we're going to place this into a new workbook within Excel. We're going to export this item. And once we do this, it should generate an Excel sheet and export this to a new tab within the Excel sheet. And it has done so. So here's the Excel sheet that has been generated. Now I'm going to adjust this a bit. We're just going to go to the View tab. We're going to go to the Windows and the Split. And there we have that. I'm going to double click on the name. And I'm going to call it Bank Rec Summary. And there we have that. And then if you know that the header, once again, if we go to the page layout, we see that it does have a header if we were to print this out. Back to the normal view. Then I'm going to save this. We're going to go to File, Save As, Browse. Going to go to Desktop where we got this information somewhere, hopefully. Get Great Guitars. Going to add a new section. New Section 9, and I'm going to put that Section 9 reports, and that will be that. Yes, and close that out. So then I'm going to close this one. Well, let's keep it up. I'm going to go to the bank reconciliation detail in the Open Windows now. Now this gives us the same information, but it looks a bit more messy, but this is really the report you want if you only save 1 of them because it gives you that detail, and you really would like to have that detail if you have to go back and look at it. So it's going to give you the beginning balance, and then it's going to give you the cleared transactions. Here's everything that cleared, and this is not as important of the information because the fact that it cleared means it's on the bank statement, which if we have the bank statement, we have that. So these are the stuff that we checked off. It cleared the bank statement. Then we have that cleared balance, which is the 109,415. That's the amount that is on the bank statement as of January 31st. And that equals what has cleared our, the cleared balances that we checked off here on our books. Then we have the detail that's really important. The difference between this number and our book number, the 94,341.17 on our balance sheet versus what's on the bank statement, is the difference of these outstanding checks. The 106, the 107, and so on, these being the amounts, that 1629.33 is the difference. Then we have an outstanding deposit, which is 955.50. That is exactly what the difference is to get here. So we know exactly what that difference is, therefore everything else is correct, and we know these are correct for sure because they cleared the bank and we checked them off. And then if we go down here, these are going to be the new transactions. Again, not as relevant, not as important, but they're going to bring us to the current balance, the latest balance that we are at. So I'm going to go ahead and export this too. We're going to go to Excel and we're going to create a new worksheet. And we're going to put that into the existing workbook that we have just created. And I'm going to browse and make sure that we have it there. So it's section 8 report. That's where actually that's not where I want it. I want to drop down, go here, section 9. And that's the one we want. Double clicking and exporting. It should then open Excel and put that, export that information into a new tab within Excel as it has done here or is in the process of doing. And then I'm just going to pull that screen over and adjust it. So we're going to adjust that a bit. So here we have this, and I'm going to go to the View tab. We're going to Windows group, take the split screen out. I'm going to pull this to the right hand side so it's in order of when we printed it. Double click, bank rec detail. And that's going to be the bank rec detail, and it will have the header on it when you print it by going to the page layout, this little icon here. You can see that the header is there. Now if you were to print this, you would want to format it a bit nicer. If we go back to the page layout, you have, let's go back to the page layout, this information here. Now obviously if you're going to give this to somebody, then the summary is nicer to give to somebody because it gives you a nice little summary, but you really want the detail if you really want to have this information. If you're going to print this out, you'd want to go to the File tab, you'd want to go to Print, and then we can try to get this on one page wide, and then if it's a few pages long, that's okay. So in order to do that, you'd probably want to adjust this to landscape first, and that'll make it closer. Let's see if that does it, and that actually pulls it all into one page. So that's good. If we go back to the file, print, and scroll down, we see that it's 2 pages long, but everything's on 1 page wide, and that's typically not bad, so that's pretty good. So that's going to be that for the bank reconciliations for January. Next time, we'll do the bank reconciliations for February.